Many people believe we are entering a new global monetary era, and right now there is a growing battle between two assets, gold and Bitcoin. For years, Bitcoin supporters believed it would eventually replace gold as the world's ultimate store of value. A digital asset that is scarce, decentralized, and independent from governments. But something interesting is happening right now. Gold is reaching new all-time highs. Central banks around the world are buying massive amounts of physical gold, and at the same time, Bitcoin has actually lost value relative to gold. So the big question is, if the world is moving toward uncertainty and financial instability, why is gold winning right now instead of Bitcoin? To understand this, we first need to understand how the global financial system has worked for decades. For a long time, economic growth depended on something very simple: debt expansion. Governments, corporations, and individuals borrowed more money to grow the economy. And to support that debt, more money had to be printed. This system pushed huge amounts of capital into financial markets, especially through the US dollar system. That's one reason why stock markets perform so well. Bitcoin was actually born during this era of massive money printing and financial expansion, but now the system is under pressure. Global debt is growing faster than the economies that are supposed to support it. Governments are struggling with inflation and rising interest rates. And historically, when global systems become unstable, investors begin looking for neutral assets. A neutral asset is something not controlled by any government and not tied to any single country. For thousands of years, that asset was gold. Gold has a limited supply, it cannot be printed, and it has been trusted across civilizations for centuries. Bitcoin was supposed to be the digital version of gold, scarce, decentralized, and portable. So logically, both gold and Bitcoin should benefit during times of uncertainty. But currently, gold is clearly leading. Central banks across the world are buying gold at the fastest pace in decades. Countries are increasing their gold reserves and reducing reliance on foreign assets like U.S. Treasury bonds. Meanwhile, Bitcoin is facing a different situation. Bitcoin markets today are far more financialized than they were in the past. There are ETFs, derivatives, leveraged trading, and institutions using Bitcoin as collateral. Because of this, Bitcoin's price can sometimes move more like a financial asset rather than a pure store of value. Another important factor is Bitcoin's historical cycle behavior. In previous cycles, Bitcoin typically spends 3 years rising and then 1 year correcting. Technical indicators also show that once Bitcoin falls below its key moving averages, prices often trend toward lower long-term support levels. This doesn't mean Bitcoin is finished. It simply means the market may still be going through its correction phase. At the same time, we might be witnessing something bigger, what some analysts call a capital rotation event. This happens when large amounts of money shift from one type of asset into another. Throughout history, this has happened multiple times. In the 1970s, for example, inflation was extremely high and stock markets struggled. During that period, gold increased more than 2,000%. In the early 2000s, after the dot-com crash, gold again outperformed most financial assets for nearly a decade. These rotations usually last 5 to 10 years, where hard assets like gold and commodities outperform stocks and traditional financial markets. Some analysts believe we could be entering a similar phase today. If that happens, gold and other scarce resources could dominate markets for years. Bitcoin could still participate in that trend eventually, but in the short term, it might continue moving through its natural cycle. In the long run, both assets represent something important. Gold represents thousands of years of trust and stability, while Bitcoin represents a new digital financial system built on scarcity and decentralization. The real question isn't which one will win forever. The real question is how capital will move between them during different economic cycles. And understanding those cycles might be one of the most important investing lessons in the coming decade.